I think the bear market's just getting started, Scarlet. Right now, it's completely dependent on the stock market going up, and that's getting a little shaky. But right now, Bitcoin's unchanged on the year you mentioned. And one of my key indicators for potentially just getting started is I watch the ounces of gold equal to 1 Bitcoin. Right now, it's 23. That's broken down through key support. Early in the year, it was 35, and that's been flat for about almost 5 years now. It's a great indication of liquidity. And for that ratio to go up, I mean, Bitcoin to beat that ancient store value, basically you need stock market volatility to go lower, and it can't really go much lower. It's 120-day volatility is about the lowest in almost 5 years. And you typically need, so to me, that's what's happening is I think the market's just starting to turn around. Also, I'll give you a good indication I think it's going to go lower. It's the Bloomberg Galaxy Crypto Index is down 10% on the year. Now, about a third of that's Bitcoin. It's the rest of the space I think is finally we're realizing it's unlimited supply, massive hubris, and just speculative excesses look like they're just getting purged.
So can I just depend upon the retail folks coming in and buying this thing through their ETFs?
Yeah. Classic sign of a peak, Paul, I'm afraid to say it is we've had a pile on into poor performance. Bitcoin's been one of the worst performing major assets this year, particularly on a volatility adjusted basis. I pointed out how the S&P, the Bloomberg Galaxy Crypto Index is down 10%. That's despite the S&P 500 up 15%. So I think they're finding out, yeah, that was great in the past when some of those early tech geeks and insiders made it. Well, now they're getting out because they realize for this space to go higher, number one, you're supporting the Trump administration. You're dependent on the Trump administration. That's what's shifted. In the past, it was away from the system. So I think what we did with Trump getting elected and when the ETFs getting launched, as we put in an enduring peak, it's very similar to the dot-com bubble peak in 1999, 2000.
We also have news today that Michael Saylor of Strategy, formerly known as MicroStrategy, has doubled down on that digital asset treasury model during the crypto sell-off last week. They bought $835 million in Bitcoin in the 7 days ended Sunday. So he's continuing to move forward with that strategy. What does the struggles of Bitcoin to gain some momentum mean for these digital asset treasury companies?
Well, I think it's an oxymoron, digital asset and treasury in the same sentence. Treasury should be in the same sentence as treasuries. And I think what's happened with Michael Saylor is he gave me a best signal I've almost ever seen of double dog daring the market gods last year when he made fun of Mr. Buffett for being overweight cash and said he should buy Bitcoin. Now he's doubling down in a 10x. So when he discovered Bitcoin in 2020, it was around 10,000. I agreed. It was a bubble. It's going to continue to go up. Definable diminishing supply and increasing demand and adoption. Now that's shifted. It's gone up 10x and he's doubling down. And MicroStrategy has been one of the worst performing stocks this year. So I'm afraid it's just the beginning. It's a normal peak. The key thing I'll say is if the stock market just drops 5% into the year end, you can easily see Bitcoin drop well below 70,000.
Let's switch real quickly, Mike, before we let you go to gold here. It's kind of testing that $4,000 support here. Yeah. It kind of fell a little bit below 4,000 and then bounced above. Should we pay attention to this 4,000 level?
We have to, Paul, because it's stuck there. It's part of the reason I shifted after Halloween from being scared to frightened by what's happening in gold. You put it all together. When gold becomes alpha significantly, and has been alpha this year, something's wrong. So to me, gold is showing peak bull market inklings akin to what I saw in Bitcoin last year. Yes, it lasted for a while, but now it's just, I have to take off my fundamentals hats. We all get the fundamentals. It switched over to the technicals when they get this stretched. It's the most stretched versus its 60-month moving average since 1980. And I say to myself, okay, typically overweight longs don't do well in this business at that level. And typically it's one of the best things you can do in this business sometimes is just take profits. I'm really concerned that gold's expensive and the whole thing is signaling that we might have some major reversion in risk assets.